Thanks for tuning into Product Chats. On today's episode, I talk with Mike Cozart, who's the VP of Product at Concrete. And we talk about the intersection of customer centricity and data centricity, and also about being a power user of your product. So hope you enjoy the show, and don't forget to leave us a review. Hey, Mike, thanks so much for coming on today.
Thanks, Kayla. Pleasure to be here.
So in a minute or less, can you tell us a bit about yourself?
Yeah, I started my career in finance in the tech telecom focused investment banking and venture capital. Then I did that for about 5 years, and then I transitioned to management roles with Amazon. And after about 4.5 years in various retail roles, I transitioned to Axon and had the opportunity to lead their digital evidence management business. And Axon is the market leader for police body cameras. So that was a really interesting and sort of unexpected but great experience scaling a business that was sort of small and emerging over another 4.5 year period. Throughout that time between Amazon and Axon, I became a pretty active angel investor on the side and informally doing a little bit of advising. And so one of the things that I did, the way I used my pandemic was to kind of go deeper in that area, and then ultimately joined up with Concrete. So I'm a VP of product at Concrete, which is a real estate investing platform startup.
Awesome. Well, let's actually take a step back, and can you kind of tell us about like your journey and how you actually got into product and what that looks like?
Yeah, I sometimes call product the accidental career, or the accidental role, because it sort of just developed sort of organically within the industry versus coming out of like academia. So while at venture, you do just about everything. I worked at a small venture firm, so it's typically me and a partner, which meant that I did all the work. And you look at everything about a company. You don't look at stock price of the public company. You look at the management team, the product, the market, the competitors, the technology, everything. But the one thing you don't do is operate the business. And so after a few years, I wanted to really try my hand and see if I could walk the walk in addition to talking the talk. That was what led to business school and then my transition to Amazon. And one of the things that I was really trying to figure out was, well, I'm going to a company now, and in some ways there's risk in that because you don't know what an organization is like. And I came across sort of this understanding of product management. And I spent a good bit of time just reaching out to alumni or friends that I can get in touch with and be like, hey, like, you're a product manager, how'd you get into that? And what do you do? And so that was the impetus. I was looking for a role within a company where I would have, I could be part of a larger company that obviously has its own, successes or strategy, but I wanted to go into a role where I felt like I could have enough autonomy to have an impact that I could say like, hey, however the company did, I delivered these results. I had this positive impact because I didn't want my career to go off track or for my contribution to get lost in the mix. I think product management came naturally as the thing that I was interested in because I had been working in sort of tech, telecom, communications, and sort of I've been a little bit of a lifelong kind of gadgety, try out products kind of guy. And so while at Amazon, I started in a business role, but Amazon being a large growing company, there were opportunities to transition into product management roles. And so I did that with the video games team and then the wishlist team. And once I kind of established myself there, it attracted other product management opportunities, which led me to where I am today.
Awesome. Well, on that, right, with kind of the work you put in at Amazon and attracting other companies, for people who are kind of looking to make that transition, like what piece of advice do you give to someone if they say, hey, I'm looking to transition, how do I make myself like the most compelling candidate? Or what's really important that helped you move from Amazon? Obviously, Amazon has a name for itself, but besides that, like what helped you kind of transition and position yourself in that way?
I think within Amazon, and I think this goes for a lot of companies, if you perform well in your role, people are open to letting you try out opportunities. So career advice to anybody is whatever role you're in today, whether you like it or not, do a good job, because do a good job for yourself, so that you'll open up new opportunities. People will respect you. And so consider doing a good job, not because some company that you don't like or the manager you don't like, but do it for yourself. It will open up doors. So in particularly join bigger companies, not bigger companies, growing companies often have more open roles than people. And I think every company, whether they're specifically a software company or not, are starting to open up product management roles. Even traditional businesses are finding they need a digital presence, right? That might be a companion app to a physical product. It could be a standalone software product. It could be an analog business going digital. So find those businesses that maybe need that, or more importantly, in my opinion, go to a growing business, because you'll tend to have a better opportunity to find new areas, tend to be, get raises and things like that when a company's healthy. So that's kind of where I would find product management roles. Now, how you position yourself, I think, can depend on where you're starting from. If you're an engineer, it's pretty easy to get into a product manager role because you bring that technical experience. It's actually one of the sort of things that I don't think is required. But if you're an engineer, you're already sort of on a product team or working with a product manager, and you understand the technology, so there's a lot of opportunities there. If you're a non-technical person and you're outside the development team, I think there are areas like customer success where you can demonstrate your knowledge of the customer. I say become a power user of the product too, so you can speak intelligently with your product manager that you're maybe reporting feedback to. If you're in marketing, try to get into a product marketing role, and then you can start to get involved with the messaging of the product and understand the customer needs and the features we're delivering, and get in sync with a product manager on the strategy and how he or she wants that to be a message to the market. So I think those things get you closer, and they also allow you to exhibit certain skills that are critical to a product manager, which is understanding the product, understanding the customer, understanding the value. So those would be ways. Depending on if you feel you need it or not, if you're doing a career transition, business school is a great way to do it. That's how I did it. Business school, the way I say it is like if I were a finance guy applying for a product manager role, they'd be like, why are you doing this? Like, we're suspicious. But if you're a business school, people, they're like, yeah, of course you're looking for something new. There's probably other certificate programs or university programs that you can do along those same lines that give you a little bit of credibility in terms of knowing the fundamental skills, that show some level of commitment that you've already put in your time and money to do it. Most of all, talk to people. Find product managers you can talk to, both the sort of line level product managers, but try to talk to like directors of product management, people that are hiring for product managers, people that are do performance reviews of product managers as well.
And I think you bring up a great point, right, about talking to people. And this is a parallel in building product and in kind of searching for a new role, is always just talking, understanding your customer. And understanding your customer can be like understanding the company, right, and what they're looking for in the role. Or it could be in product where it's like, hey, let's understand our customer, what their challenges. So I think you like bring up great points that are such parallels in product and job searching of like, hey, go out and talk to people. Right? Understand the customer and understand what they want, whether that customer is the company and the VP of product, or whether that is the customer when you're actually building out a product. So I want to actually talk a little bit more about kind of the difference between Amazon and your current role and how you like structure teams and what those biggest differences are between working for this like huge company versus a smaller company.
Yeah, where to begin? So there's a lot of differences, of course. I think one of the reasons I went to Amazon is because of their customer centricity and data centricity. Like their approach to managing their business was very different than most companies before them. And I saw them as that next GE IBM training ground for how to manage a modern business. And so I bring a lot of that to every company that I'm with, maybe not in the same style as Amazon, but I still bring the customer focus and the data-driven approach. Things that are different, it's obviously smaller, and so there's a lot fewer layers. So, and there's a much smaller team. Resource constraints are very real, and there aren't resource constraints within your own team, but also at Amazon we had a team that had developed an internal A/B testing tool. We have a team that runs search, and we have a team that does this and that. And so in the startup world, those end up being like third-party libraries that you integrate, right? So it's a very different approach in terms of all the services you need to pay for and integrate with if you're doing a mobile app, and to some degree with a web app. So that's one sort of architectural difference with your product. Similarly, you don't have the massive amount of data that Amazon is already collecting. So you need to put that system into place, start collecting data, start doing customer interviews. So I spend a good bit of my time doing that. There's, a lot more unknowns, like as you're searching for product market fit as well. With Amazon, it's a large and stable business. So largely what they're doing is incrementality, and they're not necessarily dramatically changing their business. For us, a new feature could be a dramatic change. We look at the customers that we're tracking from our marketing, and just a different marketing campaign could cut our conversion rate in half or could double it. Like it's very dramatic, the impacts of these changes that we're making as we try to find that right product market fit and things like that. So I think the days are less predictable, volatile, and the trade-offs are very, very challenging. I think one of the surprising things is how slow a startup can feel at times. And you might be working kind of furiously, but you don't necessarily see the impact. You'll see these daily fluctuations, but you don't necessarily see like the great ramp up curve that everyone sees. And I think that's one story that is often missed, which is like a lot of times these fantastic startup unicorn stories had 2 or 3 years of like this before that. And I think that's something that we fight is, oh, so-and-so did this in 6 months. Did they do it in 6 months, or was it 2 years and then they they raised funding and 6 months after that they did it? So that's sort of rambling. It might need to be edited, but
That's great.
so that's the thing. And I'd say the other thing is like roadmap decisions and strategic decisions are more fluid. And it's one of our other challenges, given that as things go out, they have an impact or don't. And it's always a question of like, should we be going further down this path, or is this far enough that we now need to turn back? That's a lot harder to answer with a startup than with an established business.
So off of that, I kind of want to learn a bit more kind of like your thinking around how you roadmap and, right, you have that risk, right, and that reward. It's a lot bigger of a risk and reward, I'm guessing, at a startup or at a smaller company, because you don't know if it's going to work. And if it does work, you're like, we hit the jackpot, right, if you get it perfect the first time. But like, tell me a bit more about how you roadmap and how you figure out what you're actually going to build.
Yeah, so I start with like, what's the company strategy? And I think this is one moment of awareness I had a few years back that I think it probably takes every product manager a little time to get to, which is your roadmap should not be a list of features. I mean, it will have features in it, but what it should be guided by is where are we today and where do we want to get to? And constructing that picture of here's what I want our product or our business to look like in the future, whether it's we will operate at this efficiency level, we will have this scalability, we will offer these features, and we want these features because we have this business goal or metric to achieve. And your roadmap should be, that's where the map part comes in, right? It's like, what's the path to get there? Whereas I think it's very natural at times to be like, oh, we want to do this feature, we want to do that feature, we need to finish this work, this customer asks for that. Those could be the right things, they could be valid, but if you do that without considering, hey, here's where we are as a business and product, and this is where we need to get to, then you're less likely to achieve that. And your executives are a lot less likely to understand your roadmap or to buy into it. And so that's something I started doing a ways back, and I call it like a strategy map of like, okay, we have C-level, objective 1, 2, 3. I have product initiative 1, 2, 3. It will lead to an outcome of this, and kind of get them to give me feedback on that. And then we break that down into the features. For a startup, we're doing something similar, and it's sort of like, okay, we need to nail some of our company goals. And this is where our own strategy is shifting a little bit, and particularly around the market we want to target. And so, we are, discussing this new target market, and has a slightly different income level, and then there's things that based on that also change. We have some regulatory things that we want to do, like getting registered investment advisor status. And that allows us to open up a whole new feature set. That feature set is good for our product and service as it is, but it also brings us to parity with a lot of our competitors. And so, I'd say as product managers, you want to know what your competition is doing. You shouldn't obsess over your competition because you're obviously trying to compete and be different from them. But in this case, some of these are very like market requirements that we build. So in the investment world, your investor wants to know, what their balance is. They want to have some projection of where their investment is going. They might want to set some financial goals. They might want quarterly reports. These are pretty fundamental things, and that's what the RIA status gets us. And so we have, we need to achieve that. And to achieve that, we have to deliver these features and do some regulatory work. So that's on our roadmap. We also have some things around the data. So we've been working on better data collection, but now we need to get better about all our various decisions, everything from acquisition and attribution to usage to, website, how our copy works. So we need to sort of invest in this data platform. We're using tools like Segment as our sort of central hub of data events. And, all these plug and play tools and third-party tools are never quite plug and play. They always require investment. I think it's always the underestimation of these tools. It's like, oh yeah, drop in the SDK and pay us $100 a month and you're ready to go. Yeah, you're ready to go. You can log in, but you're not analyzing the downstream impacts of this event yet. That's going to take a little bit of work to get that in place. And then there's a few other things along there, but that's kind of where it's coming from. It's like, okay, every team needs data. We need to be more measured, and so we need to get this in to do that. We need to hit these competitive benchmarks. That's why we need this RAA status. We need a plan for product market fit. Like, okay, some of that's in the marketing side, some of that's in the product side, some of it's in our customer success and support side. We hear expectations around how timely our product should be, or transactions, how fast they should be. So we need to build in, okay, we have hypothesis 1, hypothesis 2, hypothesis 3 on product market fit. Let's work that into a roadmap. And those are things that we're looking at, product market fit and, sort of data platform. And we're also working on some, how do we get the engineering, the actual architecture of the app itself? How do we make that something that is easy to test in, fast to deploy? Because, apps and app stores are slow. And there's a bunch of stuff that we're not going to get to. That's the hardest part, I think, also, is what are you not going to get to? What's cut from the list? There's always this temptation of oh, it's below the line, but we'll see if we can work it in. And I'm like, no, it's not in. It's not in. You have to be definitive. You have to defend that. You're like, no, it is not in. If we finish this other stuff, I'll happily do it, but it is out. I don't want a meeting. We should discuss it so that when we get to it, it'll be ready. Nope, let's have that meeting when we're doing it. Stuff like that in a corporate environment, you're expected to entertain that sort of stuff. But I think at a startup, you can be more severe in your pushback.
I think you bring up some great points, right? First you talked about really aligning what you're building out to the company goals and always having that top of mind, because I agree with you, right? At a startup, it's really easy to say, okay, we want to make all our customers happy. Let's build out these 7 features, right? But do those features actually align with what you're trying to build out, right? And then also, I think you just brought up another great point, is the ability to say no, right? Hey, you know what? Great idea. And I think this goes into having alignment with teams and just having that trust of, hey, great idea, but this doesn't align with what we're working on. And we have all these other big priorities that are getting us where we want to go. But I want to kind of hop back. Something you mentioned was kind of customer centricity and data centricity. So kind of talk about that intersection and how that works. Or maybe sometimes there are places where you can't use data to the full extent because that gets in some bias or something. So let's talk a bit about data centricity and customer centricity and kind of that intersection.
Yeah, I think you need both. I think you need the qualitative and the quantitative, right? And you need the individual, the rich context of an individual interview, but you also need the clarity of a larger sample set. I believe in being data centric, but I think sometimes that has led to the exclusion of customers and losing context. And sort of I can do it just by the numbers. I don't know why folks go that route. Maybe it's just sort of overconfidence in the data, or just they don't know how to get to people. So I interview customers on a weekly basis. This week we had 2 customer interviews and actually 2 more that I just couldn't make. So we do regular customer interviews. Often it's general questions. Because we're a new product, how did you hear about us? I'm asking a lot of questions about why do they invest? What got you interested? Were you looking for real estate, or were you just looking for investments overall? Were you just browsing Instagram and you found this ad interesting? Whatever got you to click to look at it, what actually got you to put money in? What got you over the hump there to put money in? What else are you putting money in? Those sort of questions, I want to understand their mindset. I want to understand their decision-making process. So my goal is to be able to think like my customer. And I kind of think of it like a method actor's approach. And so you do this enough times, and then you ask them, what do you like about Concrete? What don't you like about it? What can we improve? And then usually towards the end of the conversation, and I have a list of questions, but then I also kind of let them guide the conversation. The old adage of take what they give you, right? So if they're going down a certain path, they're offering me something, they want to tell me about it. So I'm going to listen to them because that's important to them. And I'll ask follow-up questions related to that. I will often ask questions about what we plan to do. And I'll say, what do you think about this feature? Or, what would get you to invest more money in sort of an open-ended way? But I'll also say hey, we're thinking about adding this feature. And I've also learned to try not to qualify. I think in natural conversation these days, we often have these large lead-ups that preface a question. I think it's an interview skill to not do that. So just asking, why did you invest? Not blah, 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 all the great reasons, because you'll end up biasing them. I think in the same way, I'll ask them about a feature. What do you think about that? But then I'll say, and I'll intentionally phrase it like almost like a friend would, which is, would you actually use it though? Like I'll almost like try to nudge them to make it easy to say no versus like, do you like it? And they'd say yes. That doesn't mean they would use it. And if they say, they kind of hem and haw, I'll sense the hesitation. I'll be like, I don't care if you say yes or no. In fact, if you say no, you'll save me the work, right? I make it easy for them to know they're not going to offend me. It's not my baby. The other thing is I will become a power user of my own app. So we'll talk to customers. I think one key thing that I kind of try to teach is not every customer is your target customer. And this comes back to road mapping and things you do and don't do. And you want to make customers happy. But I'm going to go a quick aside. A product manager's role in my eyes is to deliver a business outcome by solving a customer need within engineering constraints. So I need to know if that customer need has the potential to deliver a business outcome. And can we do it in a cost-effective engineering way? So some of those customer needs, we want to make them happy, so we do them. Some of them we can't do. And then some of them, this is for us. We're trying to find the right market segment. Some of those folks delivering those feedback, they may not be the right customer segment. But what I try to teach is when you're interviewing a customer, there's always something to learn. You may not do what they ask you to do, but what's the takeaway you can get from them? So for a lot of customers, it's the timeliness of transfers and payments. We use kind of 3 to 5 day ACH, and we are a private fund. And so there's actually a process of closing an investment. So it can take up to 2 weeks. And that's incredibly fast for the traditional private real estate market. It's incredibly slow compared to the normal consumer app. So I often talk to people internally and say, like, our customer benchmark is not traditional real estate. They never had access to it. Their benchmark is, Robinhood and stock trading apps. To some degree, it's also just banking and payment apps like PayPal and Venmo, and in other respects, it's e-commerce. I select something, I check out, I give you my credit card information, I get a confirmation, right? So that sort of speed is what they expect. Anyway, those are sort of takeaways that I would have. Back to customers, back to customer centricity and data. Okay, so yes, I interview a lot of customers. I try to learn why they do things, not just what, so that I can understand their mindset. I then become a power user of my own app and try to lose myself in it at times. I become a power user of a number of competitors' apps and see what's really nice about those. And usually for young product managers that I'm managing, I'll often tell them, become a power user or beta user for an app that has nothing to do with work. Because when you use somebody else's app, you apply your personal consumer, expectations to it. And how quickly has every one of us opened an app or tried a feature in 5 seconds, we've declared that it's crap. And I tell people, like, I want you to have that moment of realization about what you just thought, and then try to imagine our customers applying that same thing to our app. So while you say this is acceptable, it's acceptable to you as a product manager because it works and it ships. Is it acceptable to your customer? That's a different question. And so that by being a power user of these other apps, you gain perspective on what experiences are out there, what you may be benchmarked against, and you'll probably find somebody who does it better than you. And then on the data side, you need to validate this stuff. So, okay, customer says this, are they actually doing it? And I think that's one thing you were saying, like, how can I validate? So like, there's not an event for that in the app. Okay, well, what could we use as a proxy? What could get, or I have a brand new feature idea. Is there any way we can kind of estimate, the potential of this? And, how many are doing this other feature already? A good example is we have an auto invest feature that allows you to just set an amount that we automatically deduct from your bank account every month, right? We started tracking the creates of these, and that's the good metric. And then I had the idea of like, I don't see like our actual investment dollars going up that much and tying to this. And so I started tracking deletes, and people don't usually like to track the downside metric. So I tracked deletes, and I noticed some patterns there, and they're both too low, which weren't driving enough volume. So I did an experiment, which was had a dashboard card that said, automate your savings. So if you didn't have an auto invest and you've been with us for 30 days, pop that up. Lo and behold, a whole lot more people signed up. And so, just visibility to the feature was poor. It wasn't visible from the dashboard. Okay, so that's one thing that I now know, and I'm going to incorporate that into our next design. Now that I was looking at deletes and that we had a higher volume of ads and I'm looking at deletes, unfortunately, deletes were going up too. That's not so good. And so I noticed a few patterns. One is I wondered, like, how many of these deletes and creates are related? So I looked at a funnel, and ends up about 25 to 30% of people that delete recreate within the same day. That's all we let you do. Delete and create. We don't let you edit. So perhaps we need the edit feature, and that'll be a better user experience. And hopefully we maintain that 30% or more. Maybe some of those folks are deleting and not going to the trouble of creating, because actually where you delete is in a different workflow for where you create. So there's a thing there that I did where you can now create right away from the delete page. So that probably helped incrementally as well. It went from 25 to 30%. So there's things like this. You should be curious, but I think the way you get these curious ideas and curious questions is by being that power user, by thinking about your user. And so, there's one that I'm looking at now is like, maybe we let them pause auto invest, because we talk to customers when they withdraw. And why do you withdraw? And we'll get some good answers. Most of them are not like, oh, we don't like concrete, or we don't like the investment. Most of it's like, I was saving money for a car. One was recently saving for a house. Another one had an unexpected, health incident with his family. Other folks is like, stock market's down, my stocks are hammered, I need to pull money from someplace else. All real life reasons. These are not things that nothing we could have done would have stopped them from withdrawing. And they all say, hey, we would have come back. So, being a power user of other features, I know that Peloton and YouTube TV allow you to pause your subscription. And I was like, well, maybe the 70% that are deleting and not coming back, maybe if we offer them the ability to pause, so they deal with their issue temporarily, but then they still have the automation in place to restart them in 3 months. Maybe we will have a better reactivation rate if we do that. So that's something I'm thinking about right now. And the reason I'm going to great detail on auto invest is just a strategic feature. It's basically our SaaS feature. It's our recurring revenue feature. I might not go this deep on another feature, but this one is directly tied to our goals of monthly active investors and dollars invested with us. So that's why I'm thinking of all the things that could be going on here. Kind of rattling on, but what a good product manager should do is go through all these different scenarios and mindsets and needs.
So I think you touch on some really good things, right? Understanding the customer, being a power user of your product. If you can, I worked at companies. I worked at a company where they did data science. There was no way I could be a power user. But if you have the ability to be a power user, try to understand that customer journey. And so I think that's something that's so important, like you mentioned. Also aligning back to company goals, making sure this aligns with company goals. And so I think those are two things that are really important as a product leader, is to make sure that your team does that. So what's one piece of advice you would give to an aspiring product leader?
I give dozens. For me, I think it's coming back to having the deep understanding of your customer, qualitatively and quantitatively. Related to this is this idea of a technical or a non-technical PM, which is, I think, one of those sort of religious questions within product that is, I think, a red herring. You have an engineer, hopefully an engineering lead. They're the technical person on the team. I don't know that you need a product manager to armchair quarterback them on technical questions. Engineers spend their days doing engineering work, so they need somebody to be up to date on the market, on the nuances. Great engineers will ask you detailed questions to your feature requests, right? And you need to be able to answer that. Executives will ask you detailed questions on why exactly this feature and how will this drive business outcomes. This seems like, hey, it's a great feature, seems like a delight thing, but we're trying to drive revenue. So I think that's the number one thing. And some product managers, and this goes for the whole kind of tech industry, or pretty much every industry, even in finance, this was a thing where you'd see finance people going to VC events, right? And learning about pitch decks and, best practices for purchase agreements and things like that. They're getting better at VC tasks and product management, hey, learn this framework, blah, blah, blah. Getting better at product management. I always found that what made me better in my role, whether it was as a VC, whether it was a GM at Amazon or a product manager over here, was never my assigned role. That's table stakes. What made me better was understanding my industry, my customer, and diving into their world. And I think the whole tech industry learned this lesson. If you go back to 2009, 10, every app was, hey, we're going to stay in the app in the digital world. We're not really going to be in the industry. We're going to be kind of arm's length from the industry, and it often pissed off the industries, right? Because they were viewed as predatory or, to those industries. And certainly from anything in the physical world, because that was too challenging or the tech wasn't there. But if you look at now, you have, apps that recognize they're part of an industry and they now have more physical world connections. And I think those businesses, those products tend to be more successful. You demonstrate that your customer and your industry and things like that. So I think that's critical to be a product manager, and it's the thing that nobody else is doing. So that to me is what's going to differentiate. There's certainly other things to it, but that's if I got to have one, that's going to be the one.
Where can people connect with you?
You can shoot me an email, mike@concrete.com, and concrete is spelled CONCREIT, like a REIT. You can find me on LinkedIn as well, just Mike Cozart on LinkedIn. Those are the two best ways to get me.
Awesome. Well, thanks for coming on today.
Thank you, Kayla. It's a pleasure.
Thanks again to Mike for joining us on today's episode of Product Chats. For more product management resources, head to canny.io/blog, and we'll see you next time.